Looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Poole Locke YouTube channel. I'm James Locke. Today, we're going to answer some of the Ask James questions of the day. We have this first question from William, and he asks, you talk about diversifying within the stock market. What about outside the stock market? All right, that's a great question, William, and we hear it all the time. When people talk about the market, they're usually thinking common stocks, the Dow, the S&P, the NASDAQ. But retirement income planning looks at a much broader universe of investments. Outside the stock market, you have bonds where you're lending money rather than owning a company, right? So credit quality matters, maturity matters, income matters. A well-constructed bond portfolio can provide steady interest income while preserving your principal. The key is matching the maturity and quality of your bonds to your income needs and risk tolerance. All right, now you also have preferred stocks, which are technically stocks, but behave more like a bond. They pay fixed dividends and don't move the same way common stocks do. Many preferred stocks are issued by banks and insurance companies, and they sit higher in the capital structure than common stocks, which means they have a better claim on assets if something goes wrong. You have business development companies, or BDCs. They lend money to middle market businesses and pay higher levels of income. Now, because they're required to distribute at least 90% of their taxable income to shareholders, BDCs often yield 8, 9, 10% or more. Now, they carry more risk than bonds, but less volatility than common stocks. And you have real estate investment trusts, or REITs, which generate income from rent and property operations. Now, REITs also have to distribute 90% of their income, which is why they tend to kind of offer attractive dividend yields. And real estate, as an asset class, often performs differently than stocks and bonds, giving you another layer of diversification. So each of these behaves differently under different market conditions, and that's the point. When one area struggles, another may hold steady. When stocks are falling, bonds may be stable or rising. When growth stocks are out of favor, dividend-paying stocks and REITs may hold their value. The goal is to build a portfolio where something is always working for you, always generating the income you need regardless of what any single market is doing. Thanks for the great question. As always, if you would like to send in your question, love to have it. Email that question to poollocke@poollocke.com. Let's get on to our second question from Jill. And Jill says, I'm still working. Most of my money is in my 401k, and the options are mostly stock-based. What should I do? So Jill, you're describing the reality for millions of people. Most 401k plans are heavily tilted towards stocks. Income options are limited. So you might have a stable value fund or a bond fund, but the choices are often restricted to what the plan sponsor has selected. And they're usually focused on capital appreciation rather than income. Now here's the good news. You may have more options than you think. So if you have a 401k from a previous employer, you can typically roll that into an IRA and gain far more flexibility. So with an IRA, you're no longer limited to the handful of funds your old employer chose. You can access bonds, preferred stocks, BDCs, REITs, individual securities, the entire universe of income-generating investments. And if you're still working and over 59 and a half, many plans allow what's called an in-service rollover. That means you can move a portion of your money into an IRA while continuing to work and receive your employer match. You get the best of both worlds. You keep contributing and getting the match, but you also gain control over a portion of your assets to start building your income strategy. Now, not every plan allows this. So you'll need to check with your HR department or plan administrator. But, you know, it is if it is available, right? It can be a game changer as you prepare for retirement income. Now, the other thing to remember, Jill, is that your 401k is only one piece of your retirement. If you have taxable savings, a Roth IRA, or other accounts, those can be structured specifically for income, even while your 401k remains more growth oriented. The key is to look at your entire financial picture and make sure the total portfolio is positioned to generate the income you'll need. Great question, Jill. Thank you so much for sending in your question. And if you would like to send in a question for us to answer, email that question to poollocke@poollocke.com. And if you like what you heard, go ahead and like and subscribe to our channel. I'm James Locke, your retirement income source, and I'll see you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me